everyone, welcome. You're watching Business Today Television. I'm Sakshi Batra. I'm going to start this conversation with a question. Will Siddhi Vinayak Temple invest in stock markets now? Well, all of you must know that Siddhi Vinayak Temple is one of the most famous temples in Mumbai in Maharashtra. Why am I asking that question? Well, that actually could soon be a reality as the Maharashtra government has recently rolled out a landmark reform, one that could see public trusts, including some of the state's biggest religious institutions, stepping into the world of mutual funds, exchange traded funds and even direct stocks. Now, effective July 21st of 2025, public trusts in Maharashtra can actually now invest up to 50% of their corpus into a wide range of market-linked instruments. And this is a massive shift from earlier, as these kind of trusts could actually only park funds in fixed deposits and in post office schemes earlier, unless they actually got special permissions to invest in mutual funds or in any sort of other capital markets related areas as well, because those permissions would be handled on a one-on-one basis, would take a lot of time, would be cumbersome as well, and therefore most of these trusts stayed away from getting into taking a permission for that one-off investment that they would want to incur. Now, the latest circular that has been issued by the Charity Commissioner could actually turn out to be a game changer. These new regulations have now given a blanket approval, and there could be now no more need of applications, no more need of waiting for every investment decision that they would want to do. Now, these trusts can directly invest into mutual funds with at least 65% of equity investments. They can also invest in debt mutual funds that are regulated by SEBI. They could also invest in ETFs or exchange traded funds tracking Sensex and Nifty both. Even government and corporate bonds is now open for them to start investing in. They can also invest in direct shares of companies with at least a market cap of 5,000 crores and above. That's the limit. So, of course, this is great, but of course, this is not just a free run. This policy actually comes with a lot of strict risk controls as well. Now, remember, eligible securities must also have AA ratings or higher. In case there are more ratings that are available, the two of the lowest ratings will actually be considered before making that investment decision from these trusts. So, the idea is actually to provide trusts a better return scenario, but within well-defined safety nets as well. So, let's talk about the money. What could this do? Now, Maharashtra has over 59,000 registered public trusts. While there is no official number on what is their total corpus and what would a 50% corpus really mean, what kind of money unlocking could we see, there are already some estimates coming in from experts that actually tell us that about of these 60,000 odd crore rupees of trusts can actually unleash about 5,000 to 10,000 crore rupees of investable corpus over time as well. And that is one of the estimates that is being circulated from most of the CAs and those who have been looking at the amount of funds that these trusts could actually be unloading, and of course that money could be flowing in towards the capital markets. Now, this move definitely provides a fresh and sizable investor base for mutual funds, ETFs and debt markets, even stock markets as well. So, there could be fresh wave of money flow that could be coming in. And Maharashtra's move, remember, can also set a template for regulatory reforms across India that could modernize how charitable funds are actually managed thereafter. So, this could well be a new era for faith and finance, where devotion could meet diversification. Now, whether there will be a time in future when we will see temples like Siddhi Vinayak also ring the stock market bell, that only time will tell. But for sure, the doors to the world of capital markets have just opened.
Well, we all have a fond memory of old Kinetic DX. Now, years later, Kinetic Group has decided to reincarnate the Kinetic DX, but as an EV. To talk more about